Hello everyone, welcome to EagleEyeFX. So guys, I'm here again to continue on my journey of teaching you how to trade QM patterns. I know maybe you may be wondering that, does it only work for synthetics, or maybe you don't trade synthetics, you trade currencies. Now I want to show you also an example that this strategy is very powerful and it also works on currencies. And actually next week, God willing, I want to start a challenge of now trading on a currency account. Just last week we did an account growth from just $20 to $100 within I think 2 days or something. And of course I did a withdrawal over the weekend, because remember, money, the money that you trade, or when you trade you make profit, that is your money once it is in your bank account. While it is still in the broker account, it's still not your money. You can actually lose it maybe by trading. You can enter the next trade and lose everything. So it's only your money after you've withdrawn it. So you can see here, you can see that now my balance is around 72. I had grown to maybe around 110 thereabout. So I only took $20. I only took $40. So $20 is the initial investment and another $20 profit. So you can see that now we are at 72. So I want to start from 72 from next week and see now if I can be able now to grow this to 200, then do another withdraw, and like that till you get to the bigger account. So I just want to show you a few examples on currencies, and to show you that really QM patterns do work on currencies as well. So let me start with NZD CAD. You can see that here. Remember I said that the first thing, if you have watched my previous video that I explain about QM patterns, I say the first thing is what? It's market structure. That is very important and very crucial. So you can see that NZD CAD has been on a downtrend. So definitely, of course, when the market approaches this level, we want to look for selling opportunities. And you can see here, already you can see here. So this is a 4-hour time frame. So once you find your the direction of the market, now you know what you're looking for. So let's go to the 2 hours time frame, or you can use the 1 hour time frame. It doesn't matter. You can choose any time frame you want to use. And now you say the first thing is change this into line chart, and there it is, guys. What do you see here? You see the break of structure, right? And then what do you see here? We see that. So we have the break of structure there, and we have our change of character. This is when market gives us what? Higher highs and lower lows. So you can see that this place of this high was broken and this low was broken. So what will we be doing after that? We'll be waiting for this market to come and tap this level, and once it taps that level, that is when now we start looking for selling opportunities to the downside. And now you can see here, let's go back to this. So you can see it's very clear. So on the 1 hour, I think on the 2 hours time frame, it was very clear on both time frames. But I like using the two of them. So the next thing we do is, so you can see here that we have those are our highs, so we have to draw them nicely. Then those are our lows over there, and then this zone, this is a place where we'll be looking for what? We'll be looking for our selling opportunities. And now we patiently wait. You can see the market came to tap that level. This is just something that happened I think on Friday. And maybe you can set up your if maybe you could have set up your sell whatever limits at that level. You can see that could have walked away with what? With around 4.46%. So you can see the QM pattern there work. So another thing is, if you look at this, if you look at the awesome oscillator, you can see that the awesome oscillator, from this level to this level, it was giving us what? It was giving us lower highs, while the market was giving us lower highs, and the awesome oscillator was giving us what? Higher highs. What is that? That's a clear what? That's a clear hidden divergence over there. That's the reason why we'll be interested in looking for sales once the market approaches that level. And also you can see here as well, as the market was giving us higher highs, the awesome oscillator was giving us what? Lower highs. That's also another what? That's also another divergence. So let me show you another example. Maybe that's NZD CAD. Let's look at Euro, NZD, and see if we have gotten another one. Let's look at this. So look at this. Very, very, very clear. What do you see here? What do you see? The way market came. So remember, first thing, change into line chart. What do you have? Higher highs and lower lows. Mark this zone. Go back to your candlestick. Wait for the market to come and tap this level. Once it taps this level, you do what? You enter. So you can decide to enter at market price, or you can do what? You can sell. You can set your limits. Then of course, remember, you have to set your stop loss. Then you hold it to this low over here, and you can see clearly this one you could have walked out with around 8%, or maybe let's say somewhere around there. Maybe to have taken you out on break even around 7.43%. Very simple. Break of structure, change of character, retest, you enter and you go. And also, if you look at the let's look at the awesome oscillator. Let's look at this level, what was happening. Let's check on the 30 minutes time frame and see. Look at that. So I say sometimes the divergence may not be clear, maybe on the time frame that you are seeing the whatever, but you can look for the divergence in another time frame. So you can see here that we had our regular divergence, bearish divergence, whereby the market was giving us higher high, but the awesome oscillator was giving us lower high. So that's a clear divergence over there. Then it's an indication that the market is going to reverse. All right, let's look at maybe another one. Let's look at CAD CHF. CAD CHF is not very clear, but you can see here we had a break of structure. So perhaps when this market comes all the way here, then we might be interested in looking for our sales to the downside. All right, let's look at EUR CHF. Yeah, look at this. You can see clearly, but some of them you have to be very, very, very patient. All right, you have to be very, very, very patient, to wait for them to really play out. So on the 1 hour time frame, you can see here, let's reduce this a bit. You can see here on the 1 hour time frame, what did we have? Yes, do you see this? We had higher highs. Can you see that? Yes, we had higher highs. Sorry, let's use an arrow. So you can see here we had our higher highs. Okay, I'll make this to be yellow so you can be able to see, and we had our lower lows. So what will we be doing? We'll be waiting for this market to come and tap this level. Then once it taps that level, look at that, you just enter. Either you enter at market price, at market execution, or you can set your limit orders, and you can see around maybe 10%, or let's say maybe around maybe 6%. Maybe you could have been trailing your stop loss, right? And then look at that. It just plays out. It doesn't matter how long you wait, as long as it comes to your zone, then you see that you'll be able to capitalize on that move. And let's see if, and then you can see here as well what's happening over here. What's happening. You can see here, as the market was giving us higher highs, the awesome oscillator was giving us what? Lower highs. So that's a clear divergence, and I'm sure it's more clearer on the 30 minutes time frame. Yeah, you can see as the market was giving us those higher highs, even if you change to line chart, you can see it's a clear higher high. As the market was giving us higher high, the awesome oscillator was giving us what? Lower high. So though that's a clear divergence over there, no question about it. Then you just wait for the market to tap that zone, then you do what? Then you enter. And of course, you have to consider what? Market structure. I cannot not overemphasize that. And you can see that on the 4 hour time frame, once the market comes to this level, of course that is a very strong resistance level that we want to start looking for selling opportunities. All right, let's look at another one, maybe one or two another examples. We had a GBP CHF. Let's look on the 2 hours time frame or on the 1 hour time frame. Those are my two main time frame that I normally use, and this is a buy market. What's happening here? So you can see that we were on a downtrend, but what happened here at the bottom here, we had our, let's change this into line chart. What do we have here? We have our break of structure, lower lows and higher highs. Can you see that? That's our higher high and that's our lower low. So what do? We're gonna wait for the market to come and of course tap this level, right? So we wait for the market to come and tap this level over here. Then we look for buying opportunities. And you can see here, I think there was news because this looks very spiky. Maybe there was news, I'm not sure about that. But you can see once the market tap into our level, then you do what? You enter. So normally I don't, there's another confirmation that I normally use, but of course that one I only teach to my students. I normally don't want to put limit orders, because you see certain spike, this one can take you out, then look, it goes ahead to play your direction. So there's another confirmation that I normally use, and that one is found on the student community. Very effective, very powerful to learn. But you can see here the point is still the same. We have our QM pattern, and then you can see that this went ahead and played out. All right, maybe let's look at Euro GBP and see. There was a clear example here. All right, so first of all, market structure. What do you see? You see that this market is on an uptrend. Let's go to the 4-hour time frame. So clearly you can see that we are on a what? Let me take out everything. So clearly you can see that the first thing, we are what? We are on an uptrend. So what do you want to do? Definitely we want to look for buying opportunity. That's the 4-hour time frame. So we go down to the maybe to the 2-hour time frame. All right, and what do we do? So we are waiting to see the market's reaction. Once it does what? Once it taps to these levels over here. And what do you see here? Let's change this into line chart. What do you see here? Look at how the market approaches this level. What do we have here? We have our break of structure over here. Can you see that? And we have our higher highs, which is our change of heart. You see that? So we have lower lows and higher highs. Let's go back to that. So you can see there about, okay. And then now what do we do over there? After that, we want to mark, it's very big. We want to mark this. So normally you're supposed to use the body and the wick of this, but you can see that is a very big zone. You might actually easily be confused. So normally I like using from the end of the body here. I mean, just marking the wick, and you can see there. So what will we be doing here? We'll be waiting for the market to come and tap this level. Then now that's when we start looking for our entries. And you can see the market came all the way to tap here and actually coincided or touched our trend line, which was also a good sign. That means that now you can enter your market, right? And then you can place your stop loss maybe somewhere around there. I don't know how many pips you want to use. I'll leave that to you. And then look at it. Even if you targeted just this high over there, that's a 4%, but you can see it played out around 7%. But let's say that maybe could have been taken out on break even somewhere around 5 point something. And you can see it keep on repeating itself. Look at this. We had our lower lows and we had our higher highs. Do you see that? If you change this into line chart, you can see lower lows, higher high. Then what do? We wait for the market to come and tap this level, of which the market did came and tap this level. And then of course you want to enter it on the zone there and place your stop loss somewhere around there, and you have your around 3%, or maybe you can target that level, which is around almost 4.83. So you can see that the strategy is still the same. And looking at this, so remember we have to also look for our divergence. You can see that from this level to this level, that maybe we caught this over there, what do you see? The awesome oscillator was giving us what? Lower lows. So what is that? When the market is giving us higher lows and the awesome oscillator is giving us lower lows, that is a hidden what? That's a hidden bullish divergence. And a hidden bullish divergence tells us that the market is gonna continue on the current trend. So these are all things that I teach in my course guide. So I have a course I teach on divergences, the regular divergence, the hidden divergence, how to master them, how to look out them. I show a lot of examples. I teach about the QM patterns, the buy QM pattern, the sell QM patterns. So all these you can get them on my course, guys. And if you want to, of course, if you want to get my course, you can reach me out on Telegram, and then we can talk on that, and then I can guide you on how you can be able to access that, right? But you can see here that's a clear hidden divergence telling us that the market is going to continue on the uptrend, and you can see that it just played out like that. And maybe finally, let's look at gold. If you have gotten something on gold, yeah, very key over here. So let's go to the 2-hour time frame. No, let's just stay on the 1-hour time frame. First of all, let me show you this move. You see this particular move? There it is. There it is. What do we have? Change to line chart. What do we have here? Higher highs. And then what do we have here? Lower lows. Simple. So once we see higher highs and lower lows, what are we doing? We are marking our zone. Let's take this one out. We are marking our level. Let's go back to that. We are marking this level and waiting for the market to do what? To come and tap that level. Then once it taps that level, we are looking for our confirmation. All right, there it is, tap that level. Maybe you could have gotten this. How many pips are those? Around 200 pips. That's 193 pips. The market came back. There was news here. Remember this? There was news here, but immediately after the news, and you could have still entered your trade. Maybe you could have entered somewhere around there. Then of course you want to place your stop loss above there, or after the news now you can place your stop loss somewhere around there. You can play around with that. Then target around there, around almost 800 pips. So you can see it's very effective. And of course here another one. Let's take this out. What do you see here? We had our higher highs and we had our lower lows. So what will we be doing? We'll be waiting for the market to come and tap that level, right? Once it tap that level, we are looking to do what? We are looking to sell. Then maybe you could have entered your sell somewhere around there. Of course, I know how to enter. I have, like I said, there is something I normally use for my confirmation. That is now for my perfect entries. There is what I normally use. But you can see, I mean, you could have worked out maybe with around 200 pips. Let's say you could have taken it on break even, around 150 pips on gold. And you can imagine 150 pips on gold. But you see, you want to always trail your stop loss, because if you don't trail your stop loss, look, see the market just did reverse and move to the upside. But there are so many examples, when the market really played out massively. For example, let's see, let me show you one last example. Yeah, let's look at the 2-hour time frame. There it is. Is that clear enough? No, all right. Let's look at maybe an example that really played out. There's one example that was really beautifully played out. Oh man, I can't find it. But even without going far, here it is. You see here? What do you have here? Change this into line chart. What do you see? Higher highs, right? Had our higher highs. Where's the line? Had our higher highs, and then we had our what? Lower lows. Go back to candlestick. What do? Mark your zone. There it is. Look at that. Perfect entry, right? It's not perfect entry. Good entry. Right? There it is. And then look at that. Beautiful. Mark that nicely. Another thing, what do you see here? As the market was giving us higher, what did the awesome oscillator do? Lower lows. Clear divergence. Very amazing and powerful divergence. What do? Place your entries on that and place your stop loss above there, depending on your count size, or you can place your stop loss somewhere around there beautifully. And then look at that. 0 drawdown straight into 10%. Let's say maybe we have taken it out around here on break even around 7.43. So once you get everything in order, you have the structure, you have your divergence, you just enter, place your stop loss. Then once you move into profit, start trailing your stop loss. So thank you so much guys for watching. You can see that it works also on currencies, and next week I want to start growing also a currency account, and I want to show you that this thing works and is very powerful, and I want to encourage you to learn as much as you can. Of course, I can teach you guys on how to I have a course, like I mentioned, on that covers everything from QM patterns, buy QM pattern, sell QM pattern, market structure. It covers on divergences, the various divergences that you have, how to spot them, how to use them, and everything, how to master using the AO, the awesome oscillator indicator, and so many things. So guys, remember to like, to subscribe to our channel, remember to follow us, remember also to leave us a comment on the comment section below. Thank you so much guys for watching, and I'll see you on the next episode.